Hello and welcome to Monday Skills Banking and Financial Services Career Series. My name is Ajit Nair. I'm a career coach specializing in banking and capital markets technology and business operations careers. I've spent 20 plus years in this industry, developing technology and operations solutions for some of the largest banking and financial services firms across US, Canada, and Europe. This video is designed to guide freshers and early career professionals on some of the exciting career opportunities available in the field of banking and capital markets operations. By watching this video till the end, you will have a clear understanding of various roles that could help you launch your career with leading investment banks and financial services firms. We'll discuss day-to-day job responsibilities, activities involved, the career path ahead, and the essential skills you will need to succeed in these career roles. We will also share insights into top companies that are hiring for these roles and tips on how to stand out in the job application process. If you have any questions or need further assistance after watching this video, please feel free to email us at careersupport@mondayskills.com. We will start by looking into the career role as a KYC analyst. KYC regulations originated in 1970 when US passed the Banking Secrecy Act to prevent money laundering. This act required banks to conduct due diligence on their clients at the time of opening of the account. After the 9/11 attack on the Twin Towers in New York, US Patriot Act was passed in 2001, which expanded the KYC requirements for financial institutions. In the last 2 decades, financial institutions across the world have hired thousands of KYC AML professionals to comply with the regulatory requirements. If you go and search for KYC jobs on popular job boards, you'll find thousands of job openings. Most of these job openings will be for KYC associates or KYC analyst roles, where freshers and early career professionals can launch their career. In this section, we are going to look at the KYC associate or a KYC analyst career role. You would have probably completed the KYC documentation when you opened a bank account. KYC or Know Your Customer is closely linked to financial crime prevention. KYC is the process that a financial institution uses to verify the identity of customers and assess the potential risk associated with their transactions. In accordance with the anti-money laundering requirements, banks across the world are obliged to perform Know Your Client or KYC reviews on all new clients they sign up. These checks and reviews are made in strict accordance with the regulatory requirements within a country and banks' internal policies. Financial crime refers to crimes committed by an individual or a group of individuals to provide economic benefits through illegal methods. Some of the common financial crime methods include money laundering, identity theft, credit card fraud, corruption, bribery, securities fraud, etc. According to leading IT and business operations research firm Celent, banks spend more than 30 billion in KYC operations and technology. You may be wondering, why do banks spend so much money on KYC AML? Well, that's because regulators across the world have been imposing large fines on banks who are non-compliant with the KYC AML requirements. Since 2008, banks have paid more than $50 billion in fine for not complying with the regulatory requirements. Regulators have imposed fines of more than $2 billion each on some of the leading banks that include BNP Paribas, JP Morgan, UBS, Goldman Sachs, HSBC, Standard Chartered, etc. In the US alone, banks have paid more than $30 billion in fine. A KYC or Know Your Customer analyst is a professional responsible for verifying the identity of a customer and assessing potential risk associated with them for the financial institutions and businesses. Their primary role is to ensure compliance with anti-money laundering and counter-terror financing regulations. KYC analysts are the first line of defense for banks to keep bad actors out of their system. Let us now look at who hires KYC analysts. KYC analysts are hired by various types of financial institutions and organizations subject to regulatory requirements to conduct customer due diligence and prevent financial crimes. Some of the entities that hire KYC analysts include commercial banks, investment banks, and other banking institutions who need to ensure compliance with the anti-money laundering and know your customer regulations. Asset management firms, wealth management firms, and other financial service providers hire KYC analysts to onboard clients and manage risk associated with the customer accounts. Insurance companies hire KYC analysts to verify the identity of the policyholders and assess potential risk. Brokerage firms and securities dealers hire KYC analysts to conduct customer due diligence for securities trading. Fintech startups, cryptocurrency firms, and money transfer service providers hire KYC analysts to comply with the regulatory requirements and ensure security of their platforms. Large organizations may have a dedicated compliance and risk management department, and they hire KYC analysts to oversee customer due diligence and ensure adherence to the regulations. Government agencies involved in financial oversight and regulations may also hire KYC analysts to monitor compliance in the financial services sector. Some consulting firms provide KYC services to other organizations and hire KYC analysts with expertise in customer due diligence and AML procedures. KYC jobs have a low entry barrier. Most firms hiring KYC analysts look for candidates with an undergrad degree. An ACAM certification in KYC will help associates get faster career growth and a better pay. Skill Board certification in financial crime compliance or a certificate course from Financial Crime Academy can also help you accelerate your career in the KYC AML compliance space. Key responsibilities of a KYC analyst include examining identity documents, financial statements, and other relevant records to verify customer identities and compliance with the regulatory requirements. KYC analysts assess the risk of customers based on various factors like country of origin, business type, transaction patterns, and reputations, etc. They conduct research on customers, related parties, beneficial owners to ensure transparency and legitimacy of the business relationships. KYC analysts need to collaborate with internal users, compliance officers, and sometimes with clients to gather necessary information and clarify on any discrepancies in the documents provided by them. They maintain accurate and comprehensive records of customer due diligence and interaction for auditing and reporting purposes. Continuous monitoring of customer accounts and transactions to detect suspicious activities and report any potential red flag to the compliance team is another responsibility of the KYC analyst. KYC associate is the entry-level position for most KYC professionals, though some banks may hire KYC analysts at entry level as well. KYC analysts with 3 to 5 years of experience can become team leads, in addition to managing day-to-day KYC operations. With further expertise, they can become KYC manager, where they would manage the KYC operations for a geo or a category of clients. KYC AML career roles are popular with career starters, as it offers multiple alternate career paths for professionals once they have some experience in the KYC domain. Some KYC analysts move into IT group as business analysts, while some other KYC professionals with ACAM certification can become AML compliance officers with banks. With 7 to 10 years of experience in KYC and compliance, some analysts move into broader risk management or compliance management roles within the organization. Experienced KYC analysts may also have opportunities to work as consultants or advisors, providing KYC and AML expertise to other organizations. If you want to grow in KYC AML career, then you should consider pursuing AML and KYC certification from ACAMS. Top employers of KYC analysts include Citibank, JP Morgan, Bank of America, Wells Fargo, Lloyds, Barclays, Deutsche, etc. Service providers such as Accenture, Genpact, TCS, Wipro, HCL, etc. also hire KYC analysts. Given the low entry barrier and a large number of openings, KYC associate roles are popular among career starters. With accredited industry certification, this domain offers excellent growth opportunities for KYC analysts. If you're interested in a career as a KYC associate and need help in preparing for industry certification, then you can write to us at careersupport@mondayskills.com.